Hey traders, Nick here, looking at FedEx falling 5% this morning on earnings. Okay, so this is my look at it. I am not an expert at FedEx, but I do have a few thoughts, so here we go. All right, so as far as levels are concerned, we're still within the range of acceptable levels, meaning this is nothing unusual yet. For example, this was unusual. I believe this may have been a headline from Amazon combined with earnings, combined with probably tariff fears. So we have kept good levels so far. We saw a breakout at some point, and it did come up almost exactly to it with that little red poke up there. And it hit levels where, you know, if you track levels, then you're not terribly surprised. This obviously surprised many people. Okay, so what do we do now? The earnings came out. It wasn't terrible, but it had a few holes in it. For example, they did meet the expectations on the sales on the top line, but they missed on the bottom line. But if I read it correctly, it's for a bunch of wages that they didn't account for. So labor, basically, labor should be forecast, something that they can forecast with accuracy. It's not like, the cost of aluminum went up, and if they made them aluminum-based products, then it would be a problem. But in this case, it's labor, something they control 100%, almost. So that was a little concerning. Plus, there's the China thing. They mentioned something about China traffic slowing down, or the economic situation in China is not doing as well as probably they're saying it is. So maybe they have a little more visibility there. So Wall Street was nervous about that. Nevertheless, Wall Street still has expectations higher, meaning it's still trading well below their average price targets. So I'm a little confused about that. Maybe we see another headline or two of downgrading and changing price, keep maintaining at whatever and then downgrading the price target. Those will probably cause another dip down. So do I grab it with two fists right here? It's not an obvious point of entry. So this is a daily chart. And I always look at what happened before, right? So if I wanted to get a little more granular, let's see if I can get to a smaller time frame, maybe a 240. It doesn't provide much. But here we go. So what about levels? Basically, do I catch a falling knife? It's not an obvious catching falling knife situation, except for the fact that it did bounce hard off of this. It had a nice, 6% rally, probably eyeball. It did bounce hard off of it again, before that, I should say. So expectations is that this would be level 1. Okay, to me, this is level 1. And we're already there and a little bit lower. So this is level 1 from here. And this was also the breakout point. So a pivot point of sorts. Also here, some sort of a break in the middle of this whole thing. So yes, this would be a zone where I would catch it down here better than up here. So there's no rush to catch a falling knife. I said earlier that if it held 248, 250, it could be a good news situation because of this. Then if it fell to it and came back out, then it had a chance to do this. But that's out of the question for now. So now the question is, do I catch a falling knife? Markets are at all-time highs. I wouldn't rush into it. And if I did, I'd probably sell puts out in time and around this level. Why this level? Because going back to the daily, if I undo, I think, a couple of them. There we go. The daily, I want to hide below this. So somewhere down here, which is the zone that has been well consolidated. So if I own the stock, I want to own it down here. So how do I do that? I sell puts down there. If not, put spreads. And I think November and January, I don't think there's a December contract. It's $10 wide. So I don't like $10 wides. I'd almost rather sell it naked than $10 wides. But anyway, it is a $10 wide spread. So if you have the gumption for it, then you can do that. If I want to own the shares, I'd sell a $210 put, collect some money, nothing happens, the money's in my pocket. Or I sell it at $225 if I want to own it at $225. It all depends on what I want to do. So $225 will put me down here. So you say this was a bad news situation. So this is basically the worst case scenario given the current environment. And it still bounced off of it. So this is probably the first level I would sell it at. But if not there, maybe a little bit more. So these are thoughts on FedEx. Fundamentally, it's not expensive, something like 22, 23 trailing PE. A little bit more expensive than UPS, but thereabouts within range. So it's not crazy expensive. But it's not a screaming buy. technically, it has we have visibility on support levels. That's one. Another one would be somewhere around here, and obviously this one, and then that one. And as far as technical upside, it had some, but they broke apart for now. So it has to reload in order to rework its way up there. So these are the thoughts on FedEx. If you have any questions, let me know. Nick signing out.